All right. Hello, everybody. Thanks so much for tuning in. Just getting started a couple minutes early here, just to make sure I get some of the groundwork off. So thanks so much, everybody, for taking a second and letting us know where you're from. I always like to share that with the presenter, who, of course, today is Kiki from Genworth Canada, just to let her know a little bit of the audience and where everybody's coming from. So see a lot of Ontario and BC and a little bit of Nova Scotia, which is great. I'm looking forward to a really good webinar. Now, I want to remind you that you can still, let us know. You can chat throughout the whole webinar as well. We love seeing that. As well, sometimes people have buffering issues when it comes to these. Now, we check these pretty rigorously here. So typically, if that's the case, it might be something happening on your end and your internet connection might be causing the problem. So if you're having an issue with that, my recommendation is just do a refresh, do a reload, and sometimes that will kind of give it a little kick. So keep that in mind. At the same time, know that we are recording this webinar. So, you can always come back. You can check it out later on if you need to. If you want to re-listen to what was said, you can re-listen to it. There you go. Okay, we got some Quebec in there too. Montreal, fantastic. I always have some good group of people from Montreal on my sessions. So it worries me when I don't see them there, Kiki. Just so you know, I'm actually sitting in the same room as Kiki here as well. So I'm, if you hear me coughing in the background, that's one. So, all right, let's get started. So thanks everybody so much for joining in today's webinar, Understanding Today's First-Time Buyer, featuring Kiki Sauriol-Roode from Genworth Canada. Really excited to have her here. I want to remind you again, feel free to chat and discuss. I mean, we're here with other Royal LePage professionals from all across Canada. If you have questions, more than happy to answer them. We'll address those near the end of the webinar. So I will take note of any questions that happen in the chat. Just type it out in the chat and we'll ask Kiki at the end. We are recording as well, so you can rewatch this at any time. And I invite you to share it with anybody who you think might benefit from it. If there's another realtor in your office, I've seen a lot of great webinars come through here, and I've seen Kiki and her team present a number of times. I know it's good stuff. So maybe there's somebody in your office who couldn't make it. Feel free to share it with them. And near the end, give it a little thumbs up if you enjoyed it. You can hold off for that one for a little bit. Now, in terms of our Sales Success webinar series, this is a series that we deliver every single month. And it's really intended to focus on enhancing your sales development by learning from industry experts. Now, we've had people so far, Leaders Edge, Buffini & Company, Richard Robbins International, come out and do presentations for us. And what we wanted to is really have subjects that reflect what is happening in real estate right now. And that's why I'm so happy to have Genworth Canada here, because they just released the results of their study on the first-time home buyer. And I was super excited to have Kiki come in and discuss what that really means and discuss the results with you. Finally, before I kick things over to her, I'm going to remind you that our webinar library is live in the RLP network. You can check it out. You can sort it by presenter, topic, air date, all that stuff. You'll find it in RLP network under training, webinar training, and sales success. You can see them all there, so you can check them out. And so I am glad to welcome on Kiki, Vice President of Business Development at Genworth Canada. I know I posted this on the Facebook Royal LePage events group, and I know many of you have seen her. She's a frequent speaker. She's done breakouts, keynotes for us. Over 14 years of experience and proven success in sales and relationships. So she knows a lot of what you guys are doing on a day-to-day basis. And also, she's a big contributor to Royal LePage. Not only does she come out to our events and meet with you guys and shake your hands and, give you guys the one-on-one, but she's also really involved with the Shelter Foundation, a member of the board of directors for the Royal LePage Shelter Foundation. In fact, that's why she was here earlier today. And I believe you're also going to Iceland. Is that correct?
I sure am. We're like 6 weeks away. I think we're less than 6 weeks away, so the countdown is on.
Countdown is on. So there may be a solicitation for fundraising later on.
If you really like the webinar.
Fantastic. So with that said, I'm going to turn things over to Kiki and let her get going.
Great, Mike. Thank you so much for having me back, and certainly appreciate everyone who's taken an hour, we anticipate today, out of your schedules to learn a little bit about who we've uncovered is today's first-time home buyer. My hope is that you're all familiar with Genworth Canada, but I will, before we get into the meat of the webinar, just remind you who we are, because we really focus on a very specific slice of the real estate market. Genworth is a mortgage default insurer, and so we really become engaged with the buyer when they have less than a 20% down payment. Their lender will require mortgage insurance with less than a 20% down payment. That's mandatory in Canada. And we certainly enjoy, a third or greater than the market today of all of that business. When folks have less than a 20% down payment, it typically is someone who is a first-time buyer or a move-up buyer, which really is what triggered our interest in learning a lot more about who the first-time buyer is. Because if you work with first-time buyers, you certainly realize that they're different than folks that are a lot more mature in the real estate transaction, and their needs are different. We very similarly want to truly understand who the users of mortgage default insurance are so that we can frame products in the most appropriate way that makes sense for them, and so that we can build a lot of the consumer content that we have on our homeownership.ca site, which, by the way, we'll talk later in the webinar about, is absolutely available for you to leverage and share with your buyers. But we want to make sure we understand who the buyer is so that we can gear all of the content to what their needs would be. So as we go through this data, keep in mind that when we're talking numbers and house price, it's not the overall market, but it's the insured market. And so those numbers are much lower on average than you see the average home price, as an example. But with that frame, maybe what I'll do is just move right into the first slide. And what I wanted to do is really just talk briefly about the methodology that we used when we engaged in this particular first-time homebuyer survey. We did it 2 years ago. So when we went back in market in late January of this year, it really gave us the opportunity to gather data and compare against the data points that we had a couple of years ago to really see if there was movement in the behavior. And we've seen a lot of change in the last 2 years, particularly with the insured market, and we'll speak to that in a few moments. But it definitely did generate a little bit of difference in the data that we saw. So we're certainly very happy to share what those differences are with you now. What we did originally was decide to do a 2017 first-time buyer survey, which you'll see as the second bullet point. We had intended to go out into market January 28th through February 9th, which we did. And we surveyed just over 1,800 Canadians that were aged 25 to 34. We focused on that group because those are typically those folks that are in that stage of buying their first home. What we decided to do in January was to actually go out with a second survey, and that's the general population omnibus that we did. And we did that because there was some significant change to mortgage default insurance rules that occurred in October of 2016. We had already had plans to do the first-time homebuyer survey anyway, but we thought it would be a great opportunity to use the time with Environics, who was doing the survey for us, to ask a general group of Canadians what they thought about a number of issues related to some of the change. So we actually had 2 different groups, and you'll see some of the data slides that we have will demonstrate general population versus the first-time buyer. Continuing with methodology, this next page really speaks to what I just addressed, but it also gives you a sense of how we broke down who it was that we surveyed. So across the bottom of this screen, you'll see that we really addressed folks right across the country, from Vancouver to Atlantic, from major urban areas to general population. So, we've got a group of Vancouver purchasers and then everybody in BC but Vancouver, and compared how those 2 groups differ. Similarly in Alberta and Ontario and Quebec as well. So the way that Environics did the weighting of this really does have a it provides us statistically significant data results. Those are tough words to say.
I studied stats, so I've said it many times.
So let's get right into the heart of who the first-time buyer is. The next 2 slides really are a graphic of the summary of the data points, all put together and really highlighted in a way that's easier for you to quickly understand and get a snapshot of. It's also available on our website, genworth.ca. You can print it out so that you can keep it close at hand. But essentially, what it said is that, first of all, 9 out of 10 of these first-time home buyers are what we would refer to as millennials. And so if you've done any research on who the millennial is, that's typically who the first-time buyer is as well. 81% of these buyers were born in Canada, which means that, the balance 19% were born in other parts of the world. We've broken it down: Western Europe, China, South Asia, Africa, and then other, meaning right across the balance of the world. 10% of that group immigrated to Canada in the last decade. So as realtors, that certainly demonstrates an opportunity for you to truly educate a lot of these folks, if you understand that they're relatively new to the country, about the way that real estate is transacted here, because it's certainly very different than what they might be accustomed to in other parts of the world where they've come from. A lot of this data, I really hope, provides aha moments for you that really demonstrate this is a group of people that truly are advice seeking. You'll see that in a slide I'll share later. And they're looking for folks that are professionals like you, that are in the business of providing advice. I think that really speaks incredibly well to the future success of the full service real estate model versus the discount model that I know you come up against in each of your markets. The first-time buyer is looking for someone who is going to give them advice, not just quickly walk them through the transaction and move on to the next. So where you can, one of the big takeaways is deliver advice all the way along the process. Even if you think that they come to you very well researched, they want someone to make sense of that research. So we've already walked through sort of the profile, whether they're Canadian born or where they were born and find themselves to be Canadians looking for homes. Not surprising, 71% of them were renters previously before buying their first home. That means a bunch of them have, they're just moving out of mom and dad's place. The difference between those groups might be you've got a little more sort of sophistication and worldliness from the renters than you might from others. So again, opportunity to ask the questions about where they're previously living so that you can get perspective on what it is they might need to know about the process. A data point that was interesting, different from the last time we did this survey, 41% of this group of folks that were surveyed bought on their own. And what I'll remind you is when we went out to the public, we went out to folks that have purchased their first home in the last 24 months. So relatively new first-time buyers. These are not folks intending to buy, but rather have gone through the experience. So 41% of them bought on their own. A couple years ago, that number was 35%, which means the trend really is growing, that more and more people are feeling financially comfortable enough that they're ready to make this endeavor as an individual, as opposed to waiting for a stage of life when they might be with a partner or a spouse. It does still mean, though, that 57% did buy with a spouse or partner, which really that group is very likely thinking about developing a family. So their needs in home ownership might be different than someone who's buying on their own, who might not necessarily be buying a dwelling or looking for something where they're going to expand their family in. So 41% of the folks already had a family, 32% plan on starting one in the first 5 years. That won't be surprising to anybody on the webinar who's previously been working with a lot of first-time buyers, but certainly interesting to ask a lot of questions up front about their intentions when purchasing a home, because it really will help you narrow the scope around which you're looking for properties for them, whether they're interested in expanding their family or not, whether they're interested in moving inside of 5 years or staying more long-term. And we've got some data on that coming up as well. But The first-time buyer is certainly a financially sophisticated, well-established individual. We've got 91% of them having post-secondary education, and we've got the majority of them in the $50,000 to $99,000 a year household income range, but a lot of them, and certainly in urban areas where affordability is impacted, are making, you know, 100, 150 or more per year. That's going to certainly enable them to qualify for some of the pricier properties. A lot of this first-time home buyer today is a little older than they were previously. 10 years ago, they might have bought their first home when they were 22, 23. They're a little older now, and it's because from a post-secondary education, they're spending more time establishing themselves from an educational perspective or establishing themselves in their career for a few years before taking on home ownership for the first time. If we flip to the next page, we really look for what are these people buying, and we've broken it out by major metropolitan area across the country. I'll use this as an opportunity to let you know that you can get more details at genworth.ca. You will see a banner that runs across our website that will speak to the first-time home buyer survey. You can click on a link that takes you right to the Environics deck of data, and what they've done for us is provided a summary of who the buyers are in each of these major areas. So if you're working in the Montreal area, you can quickly go to the regional summary and see what the Montreal first-time buyer is saying, perhaps more so than the general overall data that I'll be sharing in this presentation. And similarly, we've got breakdowns for Atlantic, Quebec, Montreal, Toronto, Ontario, Alberta, Calgary, Vancouver, and BC. So you certainly will be able to find a little more regional specific data that hopefully will help you in your particular regional practices. But not surprising, in the areas like Vancouver and Toronto, where the median cost of the home is higher, you will see that they have a higher propensity to condominiums, let's say, than in areas like Atlantic, where the median cost for first-time buyer property is $191,000. And this is a really good point to stop and remind you to what I said very early in the conversation, which is Genworth's data and this first-time homebuyer data is not overall market data, but rather the first-time and move-up buyer data. They're buying much lower-priced properties when they've got that lower down payment. They're earlier in their home ownership stage, obviously. I mentioned that they're financially astute folks, and the data really suggests that they are. 61% of these first-time buyers did have less than a 20% down payment, which means they required mortgage default insurance. But that means that almost 40% of folks that are buying for the very first time have established themselves and saved enough of a down payment that they've had more than 20% of a down payment, which really is astounding. Now, some of that is saving for a down payment, and some of that might be family gifting of the down payment. We're certainly seeing a lot more gifting these days than we have in years past, and I'm going to speak to that in a couple of moments, but that's certainly part of what we're seeing form down payments these days. Little more than half of the people that we surveyed who've bought a house in the last couple of years said that they had not taken on any additional debt since buying their new home. And that really is quite an amazing statistic when you think about what often happens after you move into a new home. Now, certainly they'll have bought, the shovels and the, things that lawnmowers and other things that you might need when you're buying your first home, drapes, etc. But they've not taken on any substantial debt, which means they really have readied themselves for home ownership, and they're focused on making sure that they can ensure they manage this in a very, very healthy way. In fact, 39% of them, if we move to the bottom left corner of the slide, either doubled up or made a large sort of once a year lump sum payment on their mortgage. So not only did they have enough to get into home ownership and they haven't taken on a lot of debt, almost 40% of folks say they're actually making a lump sum extra payment through the year. So they're taking home ownership very seriously. Now, 14% did take on unanticipated debt for some repairs that they didn't think they were going to need to make on their home. Genworth has a product called Purchase Plus Improvement. We're going to touch on a little later in the webinar that if you think you're showing someone a property that they're likely going to need to do repairs to, you'd be very well served to at minimum mention to them Purchase Plus Improvement if you think they might need to be taking on some debt to do some repairs in the near term after moving in. In terms of home characteristics, we'll go through one slide that speaks to this in more details, but basically they're looking for a house in a safe neighborhood that's relatively close to work. That certainly is something that came out loud and clear. Price of home clearly is something that is of most importance to them. One thing that did come up was energy efficiency in a couple of different ways through the survey is very important to this younger group of folks that are engaging in home ownership for the first time. So we've got something that we want to share with you there about a premium rebate on energy efficient homes that I think will be important for you to share with these potential buyers, but we'll get to that shortly. And important sources of information. You know, the one that's not here, and it's a teaser, is where the realtor sits in terms of importance on sources of information. I'm not going to share that number with you now, but what I will tell you is it's high. They are looking to you for advice. So for those of you who have taken the time to be on the webinar, I think you'll be certainly better positioned than your colleagues who aren't learning about who the first-time buyer is.
So let me ask if I can, Kiki, because
Yeah.
you mentioned a couple things in there. But overall, if I was a realtor who frequently worked with first-time home buyers, what resources do you think I should have in my back pocket as like talking points with them? And I think you touched on some of them, but like in summary on the whole infographic you have, like what should a realtor, if I need to have X, Y, and Z or ABC to always be prepared, what should I have?
So from Genworth's perspective, a lot of this survey is really talking about their financial preparedness. And so realtors came out as, 65% of folks said that they wanted realtors to be able to advise them on the financial component of the transaction. We wouldn't advocate that you be financial experts on mortgages, but the one thing I can tell you, if you're working with first-time home buyers, they want you to provide advice all the way along. And that includes on the mortgage component. So at minimum, have a working knowledge, know the right questions to ask them about how much of a down payment they have they been pre-approved, are they working with either a bank or a mortgage broker already, and if not, certainly send them to somebody, give them a couple of recommendations of folks that you trust that they can work with. But they are looking to you for expertise. And it's a great point about, what should you have in your back pocket. The other thing I'd say is get to know Homeownershipbotca, which is our consumer-facing website. There are tons of resources and articles focused on that first-time buyer about things to think about when they're buying new versus old. Detached versus condo, ways to save for a down payment, the importance of keeping your credit score strong. All of those things, if you as realtors are familiar and comfortable with, you can share those resources with them. And then at minimum, you know what they're reading. So you can engage in the conversation directly with them and not be wondering what websites they're going to get their information. Should be royallepage.ca and homeownership.ca.
Just block their internet for everything else. Then
Right,
you're done.
right.
That should be easy. Thanks, Kiki.
You're welcome. So if we look at transaction values, when we did this survey, this is for folks who have bought in likely mid to late 2015 and 2016. So certainly these home prices would have gone up a little, but you can see that for those that require mortgage default insurance, they're certainly buying a more modestly priced property. It certainly varies by area. BC is a very it's a good example of how urban versus balance of the province can be very different. So in Vancouver, the average home price is $410,000 in this particular category versus the rest of BC at $350,000. Interestingly, though, if you move across to Toronto and then Ontario, other than the GTA, you can see similarly you've got that gap in average home price, and then it would go, as low as $191,000 in the Atlantic region on average. What I'm going to do is take you right down to the bottom of this chart, the down payment as a portion of the total cost of the home. So it's interesting to see how down payment can differ in different parts of the country. So on average, folks are putting about 12% down, which means the majority of them require mortgage default insurance. But in Vancouver, Toronto, and essentially overall in Ontario on average, they're putting about a 20% down payment down. So that is peculiar, given Toronto and Vancouver are the highest priced areas. So you would think if the home is that much more expensive, surely they've got less of a down payment. That would be the intuitive way to think about it. But what we see is that there is a lot more gifting of down payment that's happening in Toronto and Vancouver. So families can help their young adult children get into homeownership for the first time. So we're certainly seeing higher down payments in, the highest priced areas of the country, whereas in the balance of Vancouver the balance of BC outside of Vancouver, the average down payment is actually lower than the national average at 10%. 10% similarly in Atlantic, where you see on average the most modestly priced properties. So what this is valuable for, when we're speaking from a national perspective, is when you think about referring a customer. So if you're in Kelowna and you're referring a customer to somebody in Montreal, very valuable for you to see the differences in prices, as an example, that your consumer could expect to pay. If you go back to that infographic chart, it's very different what somebody in BC is buying by way of house type versus in Montreal or Atlantic Canada. If you're in Vancouver and you've got a first-time buyer, you might think most of them are buying condos. If they're moving to Halifax, most are not buying condos there. So it's very interesting for you to use this as a reference anytime you've got a customer that's either coming to you from a different part of Canada or you're referring them out to a different part. Just so you can give them some context of what to expect when they go to that region. If we move on to the next slide, it talks about impact on affordability. And here is where I want to reference the changes that we saw to mortgage default insurance in October of 2016. Really quite unexpectedly, I would say, to the market. The government made changes to qualification for anybody requiring mortgage default insurance. And so when we think about that primarily being the first-time home buyer, it meant that all of a sudden, instead of qualifying for their mortgage at the contract rate they were going to pay for their mortgage, they had to qualify at the Bank of Canada rate, which is a substantially higher qualifying rate than they're actually going to pay every month for their mortgage. So as an example, if the rate on their mortgage is 2.49%, which would be very competitive today, they actually have to qualify at a rate of 4.64%, which is the Bank of Canada qualifying rate. That has a meaningful impact on what somebody can qualify to buy. So you see on this chart, somebody who previously could have afforded a $250,000 mortgage now, after October, can only qualify for a $200,000 mortgage. $450 previously is now $360. This is very important as an agent for you to understand, because if your customers don't have 20% of a down payment, you need to know what they can qualify for as a mortgage, so you're not spending time showing them the $450,000 property when all they're going to be able to qualify for is $360. You want to make sure you're using your time efficiently, but that you're also setting their expectations appropriately. as you can likely imagine, what this did was have an incredibly meaningful impact on the insured market. So post-change, we predicted 20 to 25% fewer transactions in 2017 for insured borrowers, and that's exactly what we're seeing in our portfolio. Now, that doesn't mean that there's 20 or 25% fewer transactions that are happening, but it means there are fewer transactions happening, but some people are just simply waiting on the sidelines till they can save more of a down payment so that they can still get that property that they wanted to, or they're waiting on the sidelines till they can wrap their head around the fact that instead of a townhouse, I can now only afford a condo. And that, as you would know, is not an easy shift for someone to make, living in a condo versus living in a townhouse. So that takes, a few months for them to sort of wrap their head around. The other thing that it's doing is really driving gifted down payments. So we've spent a bit of time already talking about it, but 20% of people aren't sitting on the sideline. A lot of those people have actually gotten a bigger down payment by way of gift from a family member. And if they get at least a 20% down payment, it means they don't have to use the qualifying rate. This is just for insured borrowers. So all of a sudden, if they've got 20% down, they could actually still qualify at their contract rate. So they can still afford that $450,000 property. So we've seen a lot of shift in behavior there. We think that, use of mortgage insurance will rebound. But anytime we've seen regulatory change in the past, it typically takes about 6 months or so for consumer behavior to adapt and shift. What we anticipate is that the size of this change was so substantial that it'll probably take more like 12 to 18 months for us to see a meaningful recovery, which means likely early 2018, you'll start to see kind of many of those folks coming back to the market because they've saved a bit more, or they've gotten a bit more of a down payment by way of nudging mom and dad to give a bit more money, or they've thought through it, they've looked at the market, and they've realized, what, I actually can change the housing stock I'm thinking about, and I'm okay moving into a condo.
In terms of that, I have a question for that question around gifting. So is there a max that a buyer can be gifted? Is it a percentage of the price? And this is coming from Donna Gardner-Thompson from Royal LePage Gardner out in Fredericton.
Hey, Donna. I was thinking about you when I was watching the Nashville hockey series, because I think that's the last time I saw you. And for that, certainly it can be a complete gifted down payment from Genworth's perspective, as long as it's arm's length. However, more than that, when it becomes conventional and not a high ratio insured loan, you'd really need to talk to specific lenders. We'll have differences around how much they like to see from a gifted down payment perspective.
Cool.
We've talked a bit about this slide already because I've already addressed what the impact on affordability would be. But here we've got in the darker blue is the first-time home buyer that we surveyed in January and February. And then the lighter blue is just that general population. So not just first-time buyers, but just generally, we went out to the market, explained the mortgage rule changes, and asked how it would impact their buying behavior. And what we see is that first-time buyers certainly feel like the change, more so than the general population, would impact them. However, they still remain very motivated to buy. So what we saw is a good segment of the first-time home buyer who said it would be much more difficult for them to buy today, or somewhat more difficult for them to buy today, versus the general population. Now, interestingly, the general population was the group that felt they just wouldn't be able to buy at all because of the changes. The first-time home buyer, a little more optimistic. They're ready to get in the market. 18% of them thought they wouldn't be able to buy at all, but it was less than the general population, which says this group is ready, motivated to buy, but it certainly is going to mean a shift in some of their behavior. If they couldn't any longer qualify, we asked them, what would you do? And this slide shows a lot of the behavioral changes that some would consider making. So they would delay buying a home. A good number of the potential first-time home buyers said that. Or they would aggressively cut non-essential spending to save faster for a down payment. Now that's interesting because this already we've determined through the survey, they're a financially savvy group. The fact that they would aggressively cut non-essential spending means they've already built non-essential spending into their budget, because they also like a balance in lifestyle. But they certainly would be prepared to cut that in favor of getting into a home sooner. A lot of them, as you can see, have certainly no qualms asking for a down payment or a gift from their parents. A good number of them would actually seek down payment from a third-party lender. Now, this is certainly interesting, and we've not really asked that question before, but 16% of folks absolutely willing to get a down payment from a third-party lender speaks to their commitment to wanting to buy a home. What we would caution in this particular area is if it's a third-party lender, it's going to be at a relatively high interest rate. So, from an advice perspective, you want to just sort of caution them to think through what the payment and repayment terms would be on that. Or if, in fact, maybe instead of that, they would be prepared to look at something in a $10,000, $15,000 lower range to avoid that. But it certainly speaks to their willingness to find alternative ways to get that down payment if they couldn't qualify. In other areas, as we've already talked about, less appealing would be look at a lower priced home, maybe change the neighborhood that they were looking at, or again, similar to the delay buying the house, delay until their income grew a little bit. Small percentage just completely giving up on buying a home at all, which really speaks to the fact that while it's a huge financial commitment, it's something they believe homeownership long-term is the right financial thing to do. We asked about the level of worry over missing out on the perfect house, and a lot of them, whilst, less than 20% are very worried, there certainly is a degree of worry among this particular group. So I think that's where advice from realtors and talking them through the pros and cons of waiting in whatever regional market you might happen to be working in, they would really benefit from, because there's definitely some worry about what if I can't buy today and I miss out on that perfect house. Certainly it's heightened worry than we've seen in the 2015 study that we did. So here's where I want to, get to some of the sources of information. This was the tease that I talked to you about at the beginning. We asked them from a financial readiness perspective, where are they looking for sources of information to get comfortable from a financial perspective with buying a home? And not surprisingly, mortgage broker, family and friends, and banks or credit unions were the top three. Real estate agent is number 4. 65% of people said, absolutely, I view a real estate agent as a very credible source of information on where should I seek financial advice. And I think this is important for a couple of reasons. Since our relationship with Royal LePage began about 5 years ago, it's very much about educating agents on mortgage default insurance, the financial component of the buying decision. And a lot of agents have said, I don't need to know anything about that. That's why I refer to a mortgage professional. And it's not in my bailiwick of expertise, so I just won't talk to my customers about it. And I would suggest to you that this survey data suggests that that is short-sighted view. Particularly the first-time buyer is seeking advice from professionals. And if you look at the list, the top 4 most important sources of information are people. They want real live advice. They've done some research. Internet still important. Mobile tools, traditional media, social media, all important. But more important than that is a real live body that can make some sense of it for them and help them disseminate what some of that research that they've done actually means. So by no means does this say that you shouldn't have a social media presence or a digital. You absolutely should, but don't mistake their research online for meaning they don't want your advice, because they actually want it more now than ever. You're actually up by way of importance by a point over the 2015 results. So I think this is, again, a very good news story for full service real estate agents.
And what we know, I mean, in terms of millennials are peer recommendation heavy.
Yes.
Very much on the peer recommendation, and that the family friend, and extrapolating on your point earlier of being the advisor, you go, now understand when you advise one friend, that friend will say, where did you hear that from? Oh, from Kiki, my real estate agent. She showed me everything I needed to know.
Right.
And that's, if you're building a referral business, and that's super important.
Yeah, no, it absolutely is. And in fact, today I just saw a news media article from Equifax where they did some survey data on new buyers, and 40% of them said they didn't have enough financial information. So it almost validates some of the data that we've extracted, which says they need some advice. They're looking for help and support. And again, we don't want you to be experts in this area, but have a working knowledge of the mortgage process, what mortgage default insurance is, and the role it plays in the overall mortgage process, and then refer them to an expert that you really know and trust. If we look at perspectives on home, more than half of folks today, a little more than 2015, view this as a starter home. And that's not surprising because, of course, they're first-time buyers. And as agents, you almost hope that they see it as a starter home because they want to come back to you and buy another house in 5 or 7 years. But there are a lot of people now who are actually looking at wanting their first home to almost be that second home. They want it to be a more permanent property, some that they plan on stay in and renovate, and others that they want to buy. It's going to be a long-term permanent property that they don't want to have to do any renovations to. It's important for you to know that about this first-time buyer so that you can show them properties that are going to fit into what their expectations are. There are certainly some regional differences. Toronto and the rest of Ontario certainly more so than average see it as a starter home, whereas in Alberta and Calgary, they see it more as a permanent property needing no renovations. They don't want to do a lot of renovations in Alberta. Quebec, absolutely happy to do more. They see it more as a fixer-upper. So certainly knowing these regional differences, and again, on our website, you'll see a much broader regional summary of all of the differences, which I think will be valuable for you. Purchasing arrangement, we've already touched on this. Less today, and again, 2017 is the darker blue band, 2015 is the lighter. If we compare to 2 years ago, we're seeing more people buying on their own, and of course that means, conversely, fewer are buying with a spouse or a partner. Less are buying with parents, more looking to do that on their own. So it certainly speaks to knowing if they're buying single or as a couple and what that might mean to the different motivations that they have when they're buying a property. And if we speak to motivations, this group certainly does see owning a home as an important financial and wise decision. A little less say that now than they did in 2015. You can see that on the top bar. But they're just a little more, I think, apprehensive and conservative now because this would have come so shortly after a lot of the mortgage rule changes that we talked about. But it seems more lately than ever now. There's been a lot more talk about overinflation and bubble scenarios and pricing in key markets. And it's just making folks a little more cautious and aware, but certainly not moving away from wanting to buy a home. I won't go through all of these data points on their motivations for buying a home, but it's certainly less about getting ready because you're having the birth of a child or getting married, and more so about, I'm financially confident. I really don't like renting. We're seeing, a little bit more now trending towards, I need to get out of the renting scenario and own on my own. When we look at important characteristics of home, we've asked very important and somewhat important and folks to rank. As you saw on that infographic piece early, price, safety of neighborhood, size, certainly very important. The couple of things that I want to highlight here: energy efficiency of home and then energy efficiency of appliances in home certainly are ranking relatively high in terms of very important and somewhat important. So I want to take a minute and share with you the energy efficient rebate that we have for home buyers. So anybody who's buying through Genworth, we will provide a 10% refund on the premium if they're buying an EnerGuide 82 plus or more rated property. And 10% of the mortgage insurance premium could be several $100s. So if you're giving your buyer advice that they want to look into whether they qualify for the energy efficient rebate, and you know energy efficiency is important to them, they'll view you as the one that we're providing them details on the windfall of several $100s that they might get back. We process those very, very quickly inside of 7 days. Look for more details at genworth.ca, but it is a very easy application process that the homeowner goes through. They just fill out the online application, send us in that EnerGuide rating that they'll get with their property. If they're buying resale, they absolutely can still qualify. If they're doing renovations to the property, that brings the energy efficient rating up, and they'll be able to provide proof of that through the energy efficient audits that they'll need to do as part of that renovation. But certainly something to keep in mind, knowing that these buyers are very focused on energy efficiency. We talked about additional debt that folks are taking on after purchasing a home. Interestingly here, if we look at the differences between 2017 and 2015, we're seeing fewer people now taking out very low amounts, but a little higher at the $50,000 to $100,000 and more range, which really speaks to the fact that this group is certainly looking to that earlier statistic of buying a permanent home that they know they've got to do a bunch of renovations to. They're not afraid to take on those projects. So if you're not familiar already with Purchase Plus Improvement, it is a product that folks can use and still buy with as little as a 5% down payment, where if they're planning to do some renovation work right away, they can get funds inside their mortgage for kitchen and bathroom renos, replace the roof, windows, finish basements, upgrade to energy efficiency, as we just talked about. It's really turning that maybe not so perfect house into the home that they truly want. Many years ago, refinance rules changed in Canada. You used to be able to refi to 90% loan to value. You can't refinance your property any higher than 80% loan to value now, which means you've got to be in your house for a good while if you're buying with a low down payment before you've built up 20% equity that you can refinance. So what a lot of people often will do, or what they did previously, was get a line of credit for renos they were going to do and then refi that line of credit into their mortgage. They can't do that nearly as quickly now, which makes Purchase Plus Improvement even more valuable. So if you think about it, let's just say someone's buying a $450,000 house. They want to do $40,000 worth of improvements. Their lender would give them now, they would think about their mortgage instead of $450 or the purchase price instead of $450 to be $490, including that cost of improvement. So your customer clearly needs to be able to qualify for $490 as opposed to $450. But if they want to put 5% down, that down payment now is $24,500. It incorporates the $40,000. And here's what this scenario would look like. Now, these interest rates that I'm using are a little high because we think interest rates, are likely going to rise slightly. So we want to be real conservative on this. But in scenario one, as I mentioned, people could get a 5% down first mortgage and then take out a line of credit. Well, the line of credit typically is at a higher interest rate, which means that over time, the interest that they're going to pay over 5 years is going to be $82,650 for the mortgage and the line of credit. If they use Purchase Plus Improvement, where they actually get that line of credit money, the $40,000, built right into their first mortgage at that lower interest rate, not 7%, but it's all in at that 3.5% interest rate. Every month, because they wouldn't have the 7% interest rate on the line of credit, they would save $110 every single month because you introduced them to the concept of purchase plus improvement. That is interest savings over that 5 years of just over $7,000. So not only can you not refinance because of the 80% loan to value as easily as you could before, but purchase plus improvement can actually save you an awful lot of money as a homeowner if you know you're going to get renos done and get that cost in your upfront mortgage. So we certainly, again, don't require you to be experts on this product. Your mortgage specialist or bank reps will be experts on this. But if you're showing someone a property and they're saying that they want to do some kitchen renos, etc., mention purchase plus improvement as something they should talk to their financial planner or financial expert about. New to Canada is also a product that I want to mention because almost 20% of these first-time buyers were not born in Canada. And we have a significant amount of our population that immigrates to Canada every single year to the tune of almost 350,000 yearly. And our New to Canada program allows them to buy with as little as a 5% down payment, even before they've got credit established here in Canada. That allows them to establish roots here a lot more quickly and begin building equity in a property sooner. And a lot of what we hear from folks that are new to Canada that use this program, they just are so grateful to their agent and their mortgage broker or lender that has helped them buy their house faster than they thought they'd be able to. It's important in the context of first-time home buyers because they make up a big part of this potential buying population. And first-time home buyers who are born outside of Canada, they tend to immigrate to larger urban centers, Vancouver, Toronto, Montreal, to certainly a lesser degree than those two cities, but that certainly attracts a lot of new immigrants every year as well. This particular group more likely to buy with a partner than the general population, more likely to buy townhouses than condos, more likely to be in the home for less than 5 years. They do use a lot of gift by way of form of their down payment, but get to know this first-time buyer segment as well because they really are a group who, if you can help them get into their first home in Canada, wow, you've got a referral source for life because they're so grateful. And they tend really to socialize with other new immigrants that might be from similar countries. And that's a great pot of potential referrals for you that they will absolutely be happy to introduce you to. The last slide on actual piece of data that I want to share with you is the mortgage approval timeline. And I'll tell you, this is really surprising data, particularly given all of the mortgage rule changes that we've seen. So what you can see is there has been a measurable decline in the number of people who are getting pre-approved before they start shopping for a house. Now, just think about that for a minute. You've got a lot of mortgage rule changes that if you're first-time home buyers, you can't qualify for nearly as much as you maybe thought you could, and fewer of them are getting pre-approved. So I would encourage you, absolutely make sure that you're asking your buyers, have they been pre-approved? And if so, what is the amount? So that you know what property values to start showing them. It seems intuitive and I think kind of odd that I would even have to share that advice with you, but the data doesn't lie. It says that fewer of them now are even bothering to get pre-approved. So please make sure that you're encouraging your buyers to do that. Not only so you can show them the right properties, but so that your deal doesn't fall apart. Because in a lot of markets still, conditions of finance are pretty slim, if at all. You can go into an offer with a condition of finance. So you want to make sure that your buyer is locked and loaded and ready to go in terms of purchasing power. 30% of them, a lot more than before, saying, I'm getting a pre-approval, but at the point that I'm negotiating the price of my home, and a pre-approval can take a couple of days. You usually don't have that length of time to negotiate the price of a property. So
given what agents tell me all across, it's surprising to see that people would wait for that.
And you know what? The value of having done the survey 2 years ago and doing it now gives us a point of comparison, and it's worse than it was 2 years ago. So another great area of advice that you can give to your customers. Now, we've only got a few minutes left. We've really gone through the data, but I wanted to talk to you about some of those resources that we make available to you for your first-time home buyer. We've talked about some of the products that help first-time buyers get into home ownership. We've talked about Purchase Plus Improvement. We've talked about New to Canada. If you're working with folks that are in business for themselves and don't have traditional income verification, they can buy with as little as 10% down. We definitely have a product available for that niche of customer. And this wouldn't necessarily be first-time buyers, but certainly we have a product available for folks that are looking to buy a second home or a vacation property with as little as 5% down. So, you know, these might be folks that you've sold a house to 5 or 10 years ago. You know, they cottage, you know, they rent a cottage for a month or two every summer. You could actually talk to them about the value of actually purchasing another property with as little as 5% down. Start building equity in that second home. You can get descriptors of all of these products on our website. And I'll show you a slide in a minute where we've got little videos that really help describe the products in details that a homeowner can understand. Homeownership.ca, we have bucketed it in different stages of the buying process. So if someone's just early stages dreaming of homeownership, there's lots of articles related to that there. We've got articles related to financing, house hunting, the actual buying process, and then the closing and moving in process. You can certainly share these articles with your folks. So instead of constantly searching for stuff to share with people, absolutely bookmark this as one of your favorite sites. And I think you'll be pleased with the content that you see there. This is the slide where if you go to homeownership.ca/products, you'll be able to get a quick 2-minute comprehensive understanding of what the New to Canada program looks like, or what the secondary home or Purchase Plus Improvement product really entails. So it'll give you a bit of an education as well. We're actually very active on social media. We've recently launched a Twitter account that we update regularly. We're on LinkedIn as well as Facebook. If you're looking for content to share by way of blogs with your customers, certainly like us on Facebook at genworthsmartshopper.ca because we will post a couple of times a week different articles that are all related to the home buying, financing, or moving process that I think, you know, many of you, and we've heard good feedback that a lot of agents are taking those snippets and sharing them in their blogs and extrapolating on them, etc. If you want the Environics version of the survey that we've just shown you snippets of here, you can find it at genworth.ca. This banner that you see across the middle of the screen is what you'll see on our website. You can click on it to see the infographic only or download the full report. And that's where you'll see those regional summaries that I talked about that I think you'll find very useful in whatever market you're working in across the country. And with that, Mike, I don't know if we've got any other questions, but certainly grateful for the time that you provided me to share some of this detail today.
Yeah, I mean, and I think, you know, touching on some of the points that we talked about what to have in your back pocket, a lot of these videos, this content, I know I speak to a lot of realtors who, you know, talk about how to stay in touch with the millennials and they're fickle and they go, and these are great resources that you can leverage, send it out to them. Send them an email. Hey, if you want to learn more about finance or understand it better, we know video is a great tool for connecting with them and helping to explain stuff. And you know, again, you're not the source, but you can be the source of the source. So there is a question.
Yeah.
You mentioned that you predict mortgage rates to rise. Now that comes from Julia Brandel. That's her question.
Yeah.
So,
what we would say is that we have been in an unprecedentedly low mortgage interest rate environment for a very long period of time. We actually just saw in the last week, really less than the last week, I feel like it could have even been yesterday, news articles that the Bank of Canada is looking to potentially come out with an interest rate hike the next time that they meet. So while we don't anticipate that it will be a substantial rise in interest rates, I think it will be very, very gradual over an extended period of time. But I certainly wouldn't give you any advice that interest rates are going to be falling to any degree anytime soon.
Let's see. I hope so. As somebody on a variable rate mortgage.
Listen, nobody wants interest rates to rise, but I think you need to be realistic that we have been fortunate for a long period of time to be in a very low rate environment, and that there are signals from the Bank of Canada and economic data that suggests that we could anticipate seeing gradual increase.
But if I ignore those signals, I'll be fine, right?
Yeah, you could bury your head in the sand if you wanted to.
She just left the room. Okay. No, so I just want to, just in the last couple minutes, just remind you of some of our upcoming webinars. And feel free, I mean, we'll be here for another couple minutes if you have more questions. But we have some workshop webinars that we're doing relating to Smart Studio. So publishing property websites for your listings on June 20th. From lead to client with Smart Studio. Those are webinars coming up just in the next couple weeks. And a really great one coming up on July 5th with Claude Boiron. Claude Boiron is one of our realtors with Royal LePage Terre Equity. Some of you maybe saw he had a great video go viral earlier this year, and I invited him on to share some of his strategy of what he's doing on Facebook, particularly in terms of advertising, in terms of running his page, as well as his personal page, and how he's involved. He's very involved with groups and social media. So really to share his tips and tricks on there. So with that said, I'm going to, I think we're going to stick around for a couple minutes and make sure if you have questions, feel free to type them in the chat. But other than that, I want to thank you for joining us. I hope you will join us for our next upcoming webinars. And, you know, if you liked it, feel free to give us a thumbs up. Never hurts, if you ask me. And we hope to see you on the next one. So we'll stick around for a little bit and make sure that that any questions get answered. What I'm going to do, I just want to bring up. Oh, internet. Sometimes you cause me so much pain. Good afternoon, my computer likes to do this. I wanted to bring up Genworth.ca to show people. Of course, it's not working for me right now, which is great. That's not on your end, Kiki. That's on our end.
Our website's working.
Yeah. Maybe I should just go on mobile, but yeah, again, I think a lot of great resources, and definitely go check those out. We're going to be sending them out to you in an email, but definitely go check those out and, you know, print some of them off, have them handy in your office. I know myself, I've had many conversations with friends who, you know, they themselves, you know, when they saw the mortgage rule changes, they just, you know, I know I talked to them and they said that, oh, you know, we were thinking about buying a condo. And then when the changes happened, they said, well, I guess we're not going to do that. And I was like, whoa, like, hang on. Just understand what those changes mean and what that can, you know, that doesn't mean you're out.
Right.
It means that, you know, it means that you just need to reassess.
Right.
Other than that, just thanks. Great. Some likes. Ooh, 8 likes so far.
All right.
Score.
Good. Well, listen, I appreciate the time. I really do.
You know, Kiki, I appreciate your time, actually. You know, this was, you know, for those who want to understand first-time buyers and understand their needs, and the better you understand them, the better you can be equipped. I mean, this information is invaluable.
I'm glad.
And it's very interesting, like you said, to see the difference in the studies. I was really surprised to see that the change in the pre-approval. I would have expected it to go up because of, again, I mean, we know, I've heard so many people who buyers are having a tough time getting their offers accepted, and, you know, conditions are fewer, and now I would have expected to see the pre-approvals go up instead of down.
You would think, and lenders certainly are really trying to advocate the importance of pre-approvals. I think the data suggests that we need to get that message out in different ways than we have been previously. because it really will make the difference between what you can afford and what you can't, and whether you're able to close your deal on time or not.
Well, that's it. I have Denise Leonard just asking me about the availability in French of these resources.
Certainly homeownership.ca and all of those resources are available in French. I don't believe that the Environic survey data is available in French, unfortunately.
But if you're on this webinar, you understand enough to be able to go in there and get the stats. But the homeownership.ca, I think that website's available in multiple languages.
It is.
Isn't
It absolutely is. In fact, there are some resources that are available in Mandarin and a few other languages as well, but definitely available in both French and English.
Yeah. So as far as the content to share out with your clients, if you have somebody who's not such a great English speaker, then share it in their native language.
Absolutely. And at Genworth.ca, and I believe homeownership.ca as well, it will ask you to toggle between French and English so that you can select French and have then obviously see all the content in that language.
I have Vivek, who's just asking about, is it possible to get a copy of this presentation in PowerPoint? Now, I would imagine that everything you showed in here would be in the actual.
If you go to Genworth.ca and click on the link that I showed you where you can get the Environic survey data, it is all there in PowerPoint format.
Yeah, that's. I have Jim Bridgman. So Jim Bridgman from Saskatoon, and it's funny because he just made a comment just saying the immigrant first-time buyers are a large group here in Saskatoon, are interesting to work with, as well as being in need of information on the systems of home buying and insulation and home building and insulation. What I find funny about that is the first training I did with Royal LePage 8 years ago was out in Saskatchewan, and they mentioned to me, the first group I trained mentioned to me how a lot of newcomers to Canada were moving to Saskatchewan. It was kind of at the start of their big move. I remember I went a number of years later and I was like, when did these house prices get so expensive?
Yeah.
And what they said is they were getting a lot of newcomers to Canada, and they'd go to other real estate offices and they're like, oh, you don't have the credit, go away. And they were like, we take them in, we help them find a place to rent, we get them all ready to go, and then they're like, now we got business down the line. So
yeah, it's interesting. When we first started our relationship with Royal LePage, I would ask very seasoned realtors who had been in the business 20, 25 years, what advice they give to newcomers to Canada when they come to them interested in buying a property. And many of them said, I tell them to go away and come back when they've got 30, 35% of a down payment. And then I would say, did you know they could buy with as little as 5% down? And you could see the wheels turning. They had no idea. So the good news is there's a lot of realtors who don't know this program exists. So if you are one of the few that do know and you understand the ins and outs of it, you truly can target these newcomers to Canada and introduce them to the home buying market much sooner than many of your competitors think is possible.
Yeah, which, like you said, then translates to them going, oh my God, Kiki helped us buy our place. And the next thing you know, you're getting referred left and right.
So for that gentleman in Saskatoon, on homeownership.ca, we certainly do have an area of that website dedicated to articles related to the newcomer to Canada. So there'll be resources there that you can share with those folks.
Yeah, fantastic stuff. Jim's a great guy. I remember actually I met him on my first training trip as well. And I actually still have his business card from back then. So I see the questions are slowing down. I see fewer people. So I'm going to wrap this up. I want to say one more time, thanks so much, Kiki. I love these webinars, and like I said, I gain a lot from it. I find it absolutely fascinating to learn about these people who are myself. And I think of myself and my friends sometimes and go, oh yeah, there they are right there. So I want to thank you so much. I want to thank everybody for tuning in. And again, I hope we'll see you guys next time, coming up in just a couple of weeks. All right.
All right.
See you soon.
All the best.